The internet is an amazing place. You can literally find the answer to whatever question you type in a matter of seconds. We can also thank the internet for your ability to watch this YouTube video. But on the other side of the same coin, the internet can also be a very strange and bizarre world, especially when it comes to spreading misinformation just as fast as correct information, particularly when it comes to these little pieces of plastic that we call credit cards. So in this video, we're going to talk about the 10 major lies or myths about credit cards that you might still be believing that you no longer need to. We'll dispel each and every one of them. That way you'll be able to use your plastic more effectively and more responsibly. Let's kick things off with lie number 1, which is that credit cards will get you into debt and should be avoided. Last time I checked, these credit cards are not alive. Neither are they good nor bad, nor right nor wrong. Rather, they are completely neutral pieces of plastic, or in some cases metal. And what exactly does that mean? Well, it's all based upon you and how you decide to use that piece of plastic. This credit card can lie flat on my hand all day long and do absolutely nothing. It won't get me into debt, it won't get me out of debt. In fact, it won't even go buy me lunch if I ask it to. But once I make the decision to physically pick it up and go take it somewhere to go buy something, that's where the whole game changes. And there's a huge difference between going out to buy something for $200 when you have $200 or more in cash in your checking account to pay off that charge versus going out to buy something for the same $200 and you have less than $200 in cash in the bank, or perhaps even $0. In other words, it's not a matter of credit cards getting you into debt. Rather, it's a function of you getting yourself into debt or getting yourself out if you happen to find yourself in it already, or even better, avoiding debt altogether. It's a matter of financial responsibility, having a budget, sticking to it, and spending less than you make, whether you're using a credit card to pay for something or not. Lie number 2, you only need to make the minimum payment. Now, if we're being literal here, then yes, it's actually true that you only need to make the minimum payment to keep the bank happy and get an on-time payment. However, this video is not about the banks. Rather, it's about you, your financial responsibility, and using credit cards the right way to improve your life situation. This right here is the statement for my Citi Custom Cash Card. I'll put it on the screen for you all to see, and we'll walk through a couple things here together. Toward the top in a light blue box, you see where it says September statement. The first line item says minimum payment due of $20. Below that is the new balance for $207.69 with a payment due date of October 22nd, 2022. What this is saying is that during the billing period from August 25th to September 26th, roughly a month-long period, I spent $207.69 and the bank is asking for only $20 at a bare minimum, and whichever payment I decide to do, the full amount or the minimum, either way it has to be submitted by October 22nd. So if I spent roughly $207 and I paid back $20, that means the other $187 is not being paid back. Therefore, I'm borrowing that money from the bank and they are charging me interest. And that remaining $187 is going to be carried over to the next billing cycle, and that's what we refer to as carrying a balance. It's the unpaid portion from your total bill. Because in this particular example, that unpaid $187 that got rolled over might turn into $190, and then $197, and then $214, and on it grows because the interest continues to grow and compound over time and gets added to your balance that was not paid off. So what you want to do instead to keep both the bank happy and you happy is if you spend $207.69, then you want to pay back $207.69 by that due date on your bill. Lie number 3, opening multiple credit cards is bad and will hurt your credit score. If that were the case, then I would anticipate the 3 credit cards that I currently have in my wallet right now, plus all the ones in my mid-size wallet that are active accounts, plus all the other ones that I've opened up over the years in this huge binder to really drive down my score probably all the way to 0. However, as I sit here in front of you all on December 15th, 2022, my FICO score per Experian is 763, and my other scores on TransUnion and Equifax through Credit Karma are 801 and 818 respectively. And if you take a look at the different score ranges, those fall between good and excellent. And the reality is that having multiple credit cards can actually help your overall credit score. That's because there are different factors that make up your overall score, one of which is payment history. So if you have positive payment history on multiple accounts, that can definitely work in your favor. Another really important factor is utilization ratio. That is how much of your available credit you're currently using across across all of your card accounts and across each individual card account. Generally speaking, the lower the better. So for example, if you spend $2,000 a month and you only have one card with a $4,000 limit, you're using 50% of your available credit. But if you then go get a second credit card that gives you another $4,000 limit, but you keep your spending exactly the same, $2,000 a month, you'll then be using $2K out of a total of $8K, which is only going to be 25%. In other words, you basically cut your utilization in half, which per the credit scoring algorithms is a positive thing. Usually what people are referring to when they say that opening cards is bad for your score is that when you open a new account, typically you have a new inquiry get on your credit report, and that temporarily lowers your score, usually by a few points, sometimes by quite a few points if you're younger or newer in your overall credit journey and you don't have much of a strong file or history built up yet. However, the effect of those inquiries starts to wane over time and they fall off your report completely within about 2 years. So again, it's a temporary ding, not a big deal. And if you get approved, therefore, again, you have more credit to your name. You also build a positive payment history and a good track record. Actually, you can rebound from those inquiries and increase your score by getting the additional card account open. There's also the argument of new accounts lowering your average length of credit history, which is a valid point, and yes, that can drive down your credit score. However, as long as you keep a certain amount of cards open long term and build a robust history, then you should be just fine. All right, so now that you're aware that you can open or close credit card accounts over time as your journey progresses, if you find yourself with multiple cards and you want to remove the stress of managing them all, definitely check out today's sponsor called MAXREWARDS. MAXREWARDS is an app that allows you to manage your credit cards, rewards, and benefits all in one place. This includes seeing when your bills are due, tracking your sign-up bonuses, monitoring your credit scores, and more. And perhaps my favorite feature is the benefits and offers dashboard, which you can unlock with the gold level of MAXREWARDS. You might be familiar with Chase offers, Amex offers, Bank of America deals, and others. Each time you sync the app, all of your offers will be activated automatically, including the hidden ones from Amex that you didn't even know about. And believe it or not, thanks to MAXREWARDS, my Schwab Platinum card actually had 264 offers that were already automatically activated and ready to go. And as I looked them over, I found a lot of them to be extremely useful. There were a handful of ones for travel, both with hotel companies and airlines, retailers like eBay, The North Face, Boxed, and others, as well as ways to save on gas and even on some of my utilities, like saving 10% back on my internet and cable bills. So if you'd like to try MAXREWARDS, use the link down below in the description to get the gold level entirely free for your first month. And now back to these credit card lies. Lie number 4. Closing credit cards is bad and will hurt your credit score. Again, I have a whole binder of closed accounts. Plus, you might have also seen a more recent video of how I closed 5 accounts just with American Express alone within a single year. Now, a lot of those were business cards, but one was indeed a personal credit card. And the effect to my score of that account closure? Pretty much 0. Now, check this out. Per Credit Karma, my average age of open accounts is 4 years, 2 months, with my oldest account being 8 years, 4 months. But per Experian, my average age is 5 years, 4 months, and my oldest account is 14 years, 6 months. So what's going on here? Well, with Credit Karma, they're using data from the Vantage Score 3.0 model, where with Experian, they're using the FICO Score scoring model. And there are different scoring models that come up with different scores. With the Vantage Score 3.0 model used by Credit Karma, it does not factor in your closed accounts, while the FICO Score model does include your closed accounts for up to 7 to 10 years. So if I were to go close out one of my cards tomorrow, then all of that previous payment history would still be factored into my FICO score for, again, 7 to 10 years based on if it's positive or negative history. That's why in general, I'm not really concerned about closing cards that no longer serve me. And of course, there are other things to factor in as well. For example, your utilization ratio and stuff like that. So here's another video, go watch this one, in terms of if it's bad to close out accounts. That video goes into a lot more depth. But in general, if a card is costing you an annual fee, if it's not giving you much value anymore, if it's a hassle to maintain and remember to use it to keep it active, then it might be good to either downgrade it to a lower fee card or a card with no fee at all and just keep it in your sock drawer, maybe use it once every 6 months to keep it active. Or if you want, just get rid of it entirely and give yourself that freedom of mind and not having to worry about it anymore. Lie number 5, you can only use 30% of your credit limit if you want a good credit score. Let's go back to my statement from my Citi Custom Cash Card to explain this one a little bit further. You see that billing period there at the top? August 25th through September 26th. That represents the period that Citi looked at to add all my transactions up together to create one bill with all those purchases. That's called your billing cycle or your billing period. And with most banks, the last day of that billing cycle, in my case 9/26, is when the total balance of all the stuff that posted to my account will get reported to the bureaus, and my utilization will be calculated from that. What I'm saying here is that your utilization is not calculated and reported every single day. So you can actually use more than 30%. Heck, if you have a small credit limit, you can even use the entire limit if you need to at any day you want during the billing period. However, since a high utilization tends to lower your credit score, what you can do, especially again if you have a low credit limit, is look at when your billing period end date is, then back up several days. Submit an early payment to lower your balance. Let that lower balance get reported. Then you'll get your bill showing that lower balance. And from that point, just pay off the rest in full. Lie number 6, you need to carry a small balance in order to build your credit score. Again, remember what we're referring to here by carrying a balance is not paying your full bill entirely off by the due date. So if you charge, for example, $200 and you paid off $197 and you left $3 on there, got charged a little bit of interest, that's what we're talking about. You don't need to do that to build a healthy score for yourself. I've never done that once in my 14 plus years of building credit, and I'm doing just fine. Lie number 7. Credit cards with annual fees should be avoided. Allow me to provide you an example with my Hilton Honors Business Credit Card from just this past year. The card has a $95 annual fee. However, I was able to earn a free night certificate from that by meeting a spend requirement, and that free night was able to be redeemed for a property that costs $338 for the base rate. Then after you factored in fees and taxes, which the night also covered, it was $421 all in. Therefore, if you subtract 95 from the 421 night, that was a profit of $326. Essentially, you're buying a benefits package at a discount as long as the math works in your favor. And if not, then simply avoid the cards altogether, or simply because you just don't want to. You don't have to have annual fee cards, but that's typically how most people justify them. Lie number 8, making multiple payments, paying on certain days, or using auto pay will improve your credit score. Not much to say about that one. They're all equally false. It does not matter how often per month you pay your card, whether it's once or 7 times, or on exactly which day, or if you use auto pay or if you do it manually. Pay the full new balance by the due date and you're good to go. Keep it simple. Lie number 9. When it comes to rewards, 1 point equals 1 point. 1 Bank of America point does not equal 1 Advantage Mile. 1 Advantage Mile does not equal 1 Hilton point, and 1 Hilton point does not equal 1 Amex point. They all have their own valuations, and they can even have variable valuations based on what type of thing that you redeem for. If you want to learn more about this, I did a separate video a while ago about what are the value of points and miles. Check that one out for sure. It might be really eye-opening to a lot of people out there who previously thought that all the points are worth the same amount of money. And lie number 10, a good credit score is a sign of financial health and means you're financially responsible. What a credit score really is a debt score, saying if you're good managing debt, that is with all the payments, or if you're not good at managing debt. It has zero correlation to how much money you have in the bank, whether you're going to hold yourself to a budget, if you spend less than you make, and all those types of things that help you build a freer life, build your net worth, and stay on top of your finances. That's why first and foremost, you want to get your financial life in order and then add credit cards later once you're already going to be a stable individual with managing your money. And with all that said, if you enjoyed today's video and believe it could benefit other people, then please help me get it in front of them by liking this video, subscribing to the channel, and turning on those notifications. Also, check out the links down below in the description area to earn some more cash back when you shop online through Rakuten, to sign up for MAXREWARDS, which is a great app to manage multiple credit cards, benefits, stay on top of your credit score, and more all in one place, and to view my site with some great credit card offers that I've organized into different categories to help you find the cards that you like best. I thank you all for watching today's video. I hope it brought you some great value. I look forward to seeing you in future videos, and while you're waiting on my next upload, always remember that you are great.